Hi, everyone. We are now going to discuss on this particular topic, which is corporate social responsibility, or CSR, as we commonly have heard about that. What is a CSR, or a corporate social responsibility? Now, when you hear this word, you're precisely trying to define or state that an organization or a corporate has some social responsibility on itself. Okay, the idea is that when you are an organization, you are certainly responsible for the society at large, for the welfare, for the well-being of people, for the environment, for a social cause per se. And that is where the need for a corporate social responsibility comes into existence, right? In India specifically, you would actually understand it is mandatory, and we want to cover in this particular discussion, it is mandatory for some large corporates, and there are some benchmarks on the basis of turnover, profitability, net worth. So it is mandatory for some large corporates to have a spending done on the designated services, or designated or allowed services, or categories of expenses wherein the companies are putting their money on the CSR activities. All right. So that is something that you want to cover as a part of this particular topic. As an accountant, I would be expected to know, as a part of a large organization, for example, in terms of whether me as an organization, am I spending the sufficient amount on the CSR activities? What are those types of activities which are covered under the CSR permissible activities for the purposes of accounting? The accounting for these expenses as well is all something which is covered as a part of this particular discussion, right? So it is covered, or it is governed under an act, which means that you're looking at the compliance, and you're also looking at what if you do not meet the compliance requirements. They're all a part of the CSR in our discussion for the next 1 hour or 1.5 hours or so. All right. So when you say the very consideration of this particular topic is to understand the meaning of CSR. Of course, we briefly have talked about the need for CSR for organizations, since it is becoming mandatory, or it has become mandatory already. Then how do you deal with that part in accounting, in disclosure, in the spending perspective? All right. We are also going to discuss terminologies with respect to the provisions of CSR. We were trying to mention, that there are criteria like net worth, turnover, and net profit. So these are some of the terms that we're going to hear about how to measure, for example, what is the eligible expenditure, what is the required expenditure to be incurred by an organization. So what are the meanings of these terminologies or other terminologies which are used as far as application of the CSR is concerned, right? And then analyze various situations where it will be implemented as per the statute, as it's a law, as it's an act. So naturally, organizations are required to follow that. Okay, and the good part is that this is not a theoretical concept anymore, right? We don't talk about something which is merely a donation. So CSR is something beyond a donation. CSR is a lot to do with the acts or activities done by organizations in terms of various defined activities which they can conduct. So it's all about being involved in conducting those activities, or they may not necessarily do it directly, or they may rather do it through a non-government organization, or let's say having some association with such kind of institutions or organizations who are in the process of doing these kind of CSR activities on their own. So they're all flexibilities available to organizations when they want to apply the CSR from a compliance perspective. All right. What we would also be doing, of course, looking at the accounting and reporting requirements. So that is something which we all as accountants should be well aware of as a part of this discussion. Now, examination wise, this is something which is more interesting for us to know, that it has been tested already a couple of times under the new syllabus. So yes, we need to be, aware of the requirements of the topic in terms of when can you apply and how much you should be eligible to or required to spend money. What if you don't spend the money? They're looking at all those aspects as a part of this particular process. When you look at a CSR, importantly, it says that it's a process by which an organization thinks about and evolves its relationships with stakeholders for the common good and demonstrates its commitment in regard by adoption of appropriate business processes and strategies. It is not merely charity or donation. I think the message is very loud and clear. We are trying to convey, the governments are, for example, the government in India, for example, is trying to communicate that. How do you ensure that you're looking at, you're looking at yourself as not merely a business enterprise, but you're also looking at as a social enterprise. Okay, so that is where you start looking at, are your processes and strategies aligned with the well-being of humanity or the society as a whole, and that is where you start looking at it. Okay, now one of the interesting things to observe is that CSR, as it's quoted, is a way of conducting business by which corporate entities visibly contribute to the social good. Now, you can certainly demonstrate by an action, by an act, that you're doing the good for, let's say, the well-being of the society as a whole. Now, imagine, just think about it like this. We have heard these examples in real life as well. An entity which is which is into, let's say, a FMCG model or FMCG business, they state that, if you buy their product, right, so a 10 rupee out of each sale made, right, that would be contributed towards the promotion of poor children's education, or towards women empowerment, or let's say for a female child growth, as one of the instances that you can correlate to. And that is where you're not saying that as government that you are imposing something on the companies. You're imposing them to spend money, but you're also trying to convey that you please conduct your business, you do it the way you want to, but you are also suggesting to people at large that you are certainly looking or assuming a larger responsibility for doing the social cause, right? So you're in a way not really focusing on the word donations, but you're talking about it's a part, or it's an inherent part of the business activity itself. All right. So when you say that looking at CSRs, that would not just be confined to, for example, some designated products will be seeing something within the the defined activities, or which is the permissible activities governed under, let's say, Schedule 7 here. So there could be, of course, as I was trying to refer to, something on women empowerment. There could be something on education, could be rural development, could be something on rural sports, for example. And there are a list of activities. There are 12 such activities, by the way, which are permissible, right? So CSR is as the statement suggests, it's not just restricted to those. So you as a business can identify and suggest, where you look at, of course, the common goals and the social causes, which you can, of course, connect with, and you can prove to the government that yes, you are involved in these activities and you are eligible to claim those CSR requirements as per the government or as per the law. All right. So when we say that CSR means and includes, but is not restricted to those activities specified, or even those activities taken by the board in terms of the recommendations made by the CSR committee of the board. Now, you will see in the due course that when we have, the companies which are falling within the purview of the CSR requirements, so there is a need for the entities to create a CSR committee and of course have a clear demonstrated policy of the company in terms of what are the activities that they intend to conduct. How are they spending those budgets allocated under the CSR, and that is where the clear demarcation of funds is being made, right? That's something which is the expectation of this particular standard or this particular topic, of course. There are statutory provisions, of course, that we want to talk about now. Section 135 of the Companies Act, which came into existence, and along with the Schedule 7 of of the Act, and then followed by the company's CSR rules 2014. They have very specific provisions which suggest that there are obligations on organizations. There are mandatory requirements for companies to spend money on the CSR activities. Right? They have a freedom, by the way, to choose any of the activities that they want to conduct, but then it is mandatory for them to spend the money on these activities. Okay, so the need arises, the compliance requirement would arise where a company has either a net worth of rupees 500 crore or more, or turnover of 1000 crore or more, or a net profit of 5 crore or more, importantly during the immediate preceding financial year. During the immediate preceding financial year. That's where it starts. Okay, so when you say that you are in 2020, 21, if in the last year, which is 2020, 2019 and 20, if you have had any of these benchmarks being met, your net worth of 500 rupees or more, your turnover of 1000 crores or more, or a net profit of 5 crores or more during that particular year, you are automatically required to spend something. You become, of course, obliged to spend something on CSR. Now, what is that something we'll be seeing? But then the due process is that you would need to constitute a CSR committee of the board, wherein there should be at least 3 directors, including 1 independent director, right? So this is a key and an important, aspect of the CSR requirements, that if you meet any of these benchmarks, all right, that's where a CSR committee has to be constituted with at least 3 board directors, including 1 independent director. Of course, there is a relaxation. If the company is not required to appoint an independent director, then at least the committee should have 2 directors. Okay. Now, there are very specific definitions in terms of what is the meaning of a financial year. As we commonly understand, starts 1st of April to 31st of March each year, right? So it says that a financial year in relation to any company or a body corporate, it include, or it has a period ending on 31st of March every year. However, for example, if it is incorporated on or after 1st of January, okay, if it's incorporated on or after 1st of January, then the period ending 31st of March would be considered for the next year. All right, that's where you start looking at, the relevance or the meaning of the financial year. So in a way, it becomes a little larger period. It's a longer period for companies in case they are incorporated, on 1st of January or later, right? So effectively, what I'm trying to say is that if you are incorporating on 1st of January, let's say 2020, then for the purposes of becoming compliant, your financial year shall be considered up to the end of 31st of March 21. Now, what does it mean? It simply means that if I'm sitting on 1st of April 20, which is, let's say, 3 months later, and here my turnover and net worth and the net profit criteria, right? So where we had net worth of 500 crore or a turnover of 1000 crore or a net profit of 5 crores. So you don't only look at this period now, you would also include the additional 3 months of time. So that is where it can be a little more progressive for entities to be following the CSR. But yes, if the period were 31st of December 2020, right? Then you're simply saying your financial year is 31st of December 20 to 31st of March 21. And then the next year will be, of course, 1st of April 21 to 31st of March 22. And that's how you start looking at the relevance of this particular date or the definition of a financial year. Okay. Also, it is suggested that if a holding company or a subsidiary of a company incorporated outside India, right? They have a lot of multinational companies which have a setup, let's say, based out of India in form of a subsidiary. All right. So in case there are incorporated outside India, which they follow a different financial year for consolidation purposes, in those cases, the tribunal, so there is of course an act, so naturally there has to be a compliance done. If it's a non-compliance, then naturally you have to have some authorities who shall be responsible to take cognizance of those non-compliances. So tribunal comes in the picture. So tribunal may allow at on application any period, whether or not the period is let's say the same as per the financial year starting 1st of April and the 31st of March. So that has to be done within a period of 2 years of time. So the companies must file an application within 2 years in case they intend to, let's say, have a different financial year for this particular perspective. All right. Net profit would be a straightforward number. It is simply the number as per the financial statements and the profit as per the financial statement, but it does not include, importantly, any profit from overseas branches, whether it is a separate company or a foreign operations, etc., and dividends, importantly, any dividend received from other companies in India, which are covered under, and of course, complying with the provisions of Section 135 of the Act. So in case there is another entity which is required to comply with CSR and it declares some dividends to the other company, to an investor, right? So the profits of this investor will exclude any dividends from this particular company. That's a simple flow chart that you need to follow and understand from the application perspective of this particular standard. All right. Net worth is again defined. It is importantly your overall equity, that is the aggregate value of paid up share capital and all reserves which are created out of profits and securities premium account. So when we say that, we are referring to any general reserves or any such kind of mandatory reserves which actually are created usually out of the profits. Let's say it could be a debenture redemption reserve or an asset replacement reserve and stuff like that. But you would deduct any aggregate amount of accumulated losses or deferred expenditure or miscellaneous expenditure which is not written off as per the audited balance sheet. All right. However, it will not include reserves created out of revaluations or write back of depreciation. So essentially, you would have your paid up share capital, share premium, other general reserves, and other specific reserves, right? Minus, of course, any accumulated losses, right? Any deferred expenditure or miscellaneous expenditure, right? Now, essentially, you are of course talking about, when you say share premium, you're also talking about your retained earnings in this case. All right. Of course, that's where these accumulated losses will get deducted. The net worth will always include the share, premium and retained earnings in that context, right? Now, essentially, any revaluation reserve is important to follow, is not considered as a part of this calculation, right? Now, when you say you are mandatorily obliged, when you're obliged as an organization to be applying the provisions of the CSR, the CSR committee has a role to play. Okay, and that's where the CSR committee shall, for example, suggest Formulation and recommendation to the board, a CSR policy indicating the activities to be undertaken by the company in the areas or subjects specified under Schedule 7. We'll be seeing, of course, that Schedule 7 in some time, and the amount of expenditure to be incurred on the above activities. And of course, we're responsible directly to monitor the CSR policy. So the entire responsibility is put on the shoulders of the committee itself, right? Remember the committee, we talk about at least three directors, including one independent director, right? Or else at least two directors if no independent director is required. All right. That's where you start looking at the relevance in terms of fixation of the responsibility of that committee. Now, what is the committee doing? Of course, they need to formulate a policy and define the expenditure, and also they are required to understand, they need to monitor whether this policy is being followed from time to time. Of course, they can always raise the hand, they can always, go back to the board and discuss that this is not being followed, because end of the day, it's a compliance requirement to be done. Okay, so the board further should be looking at disclosure of the composition of the CSR committee, approve the recommended CSR policy, disclose, of course, the contents of the policy in terms of what it's all about, and of course should also be highlighting it on the company's website. Ensure that the activities included in the CSR policy are duly executed by the company. You may hear sometimes whether the organizations which normally, for example, would work along with an independent organization like a non-government organization. So in a way, whether that non-government organization is complying with the requirements, right? So even that is somewhere the board has to become responsible from that context. Okay, so when you say that, you're looking at, of course, further ensuring the company spends in every financial year. This is where the quantification is done, right? The quantification is done at least 2% of the average net profits of the company made during the 3 immediately preceding financial years. Okay, so that's where you start looking at that the company spends in each financial year at least 2% of the average net profits of the company made during the 3 immediately preceding financial years. Now, what if it's a new company, right, wherein they have not completed those 3 years since the incorporation? In those cases, during such period, right, which is of course less than 3 financial years. All right. Now, in that ways, it's also suggested that you give a preference to the local area or your area of domicile, right? Now, there are interesting data to follow for Indian corporates, right? A major chunk of the CSR in today's times is spending is done in the states of Maharashtra and Gujarat. Okay, now why would they do? Because many of these large companies who are required to spend money is they are domiciled out of these states, right? There's an interesting fact that you should be aware of, although it's not relevant from the examination standpoint, but something that you should be in general be aware of. Okay, so when you say that, you're looking at these disclosures, so that's where probably you start building a connect around in terms of why probably there is more spending in particular state than some other states there. All right, so when you look at all these aspects, that's where the 2% of average net profit would have a role to play, right? So that's what you want to remember. Now, again, there are 2 benchmarks that you would remember. One is that, of course, the eligibility part of it, where we said that your net worth is 500 crores, right? Your turnover is 1000 crores, or your net profit is 5 crores immediately preceding financial year. That's what you want to remember. In the immediately preceding financial year, if any of the criteria is met. Okay, you are required to, let's say, spend 2% of average net profits of the 3 immediately preceding financial years. That's what you want to remember in this case. Okay. Finally, in case a company fails to spend such amount, the board shall specify the reasons for not spending that money. So that's where you need to kind of clarify. It can happen sometimes that while you planned, of course, it didn't really work for you. Could be a very, very classic cases of COVID impact. Okay. Maybe the companies had plans to spend some money during the last quarter of the year, but just lockdowns just happened throughout the country. So you can't really do those activities now, right? It was all in the plan. You have to disclose those, of course, right? In terms of the reasons of why not spending that money, right? The role doesn't stop here. It goes a little further where it says that from the board's perspective, any amount remaining unspent pursuant to any ongoing project shall be transferred within 30 days from the end of financial year to a special account, so called as unspent CSR account. So whether we like it or not, we are supposed to spend that money, right? So whether you actually spend it or you rather would transfer it into a designated account, right? So such amount shall be spent with the company within 3 financial years from the date of such transfer, failing which the company shall transfer the same to a fund specified under Schedule 7 within 30 days from the date of completion of 3rd financial year. So there's a further timeline given. That's an important point to highlight. There's a further timeline given that you need to spend that money. If you can't spend it, then you have to put it in a designated account within 3 years, within 3 financial years, right? From the date of its transfer, it has to be again spent, right? So if it's not being spent, then naturally it has to be transferred to a fund, which is designated or identified under Schedule 7 within 30 days of the completion of the 3rd financial year, right? If a company contravenes, the company shall be punishable with fine, which is not less than 50,000, but may go up to 25 lakh rupees, and every defaulting officer shall be punishable. So it's not just a civil, but also a criminal offense, right? So we are saying that a fine of 50,000 to 25 lakh is applicable to the companies, and there is a term up to 3 years. So there's an imprisonment of up to 3 years to every defaulting officer. That's where you see if the money is not rightly spent. And for them, there is a personal fine also, which is 50,000 to 5 lakh rupees. So you may either have to spend time in jail, or you have to pay money, or maybe the authority may impose both on you, looking at the rigor of or the nature of the the non-compliance there. Okay, so this is a bit more conceptual, but I think what you want to remember is those scenarios where you have these aspects which are applicable or relevant there. Okay, we're given this question, by the way, which is talking about the requirements of the CSR, and here we have, of course, importantly, some calculations to be followed. It says, by the way, what are the provisions of Section 135 of the Companies Act regarding constitution of CSR committee? Also explain the role of CSR committee and the board. We just been through that a while ago, right? So if I were to understand that the provisions suggest 3 benchmarks: net worth, turnover, and net profit, right? That's where these benchmarks are relevant. If any of these criteria gets met, we need to create a CSR committee, which is at least 3 directors or 2 directors with 1 independent director. Something you always want to remember, right? What is the role of CSR committee and the board? You're looking at, of course, the disclosures and monitoring of whether those CSR spends are appropriately done, etc., or not, right? Then, of course, further responsibilities, they need to align it, they need to disclose those amounts, they need to disclose why they could not spend the money, and if they could not spend it, They need to put it into an unspent CSR account, something that we've all read a while ago. Okay, so that's something you want to kind of disclose. It's an examination question, so you need to be a bit more aware of that and comfortable with that as well. Okay, so now given also XYZ Limited is a company which is a net worth of 250 crores. All right, it manufactures parts of automobiles. The sales of the company are affected due to low demand of product. The previous year's financial state of the company is given as below, which is turnover is 500 crores, which is for the year 31st of March 2018. The net profit is 4.25 crores. For the earlier periods, 31st of March 17, the profit was 8 with the turnover of 900 crores. 16, it was 3.5 crores with a turnover of 400 crores. And in 2015, it is 3.25 crores and 350 crores respectively. Now, the question is, examine whether the company has an obligation to form a CSR committee since the applicability criteria is not satisfied in the current year. Rightly so, it is not satisfied. The question is that, will you be required to follow that CSR committee? That's the question. All right. Now, importantly, what I was saying is that this year in itself is not relevant for us. Okay. What is relevant is, of course, the year 31st of March 2017. Right. And that's where you start looking at, while the turnover is less than 1,000 crores, your profit is more than 5 crores. Your profit is more than 5 crores. That simply means, yes, there's an obligation to form a CSR committee, as in the previous or the preceding financial year, that benchmark is achieved. That benchmark has been achieved by the company, which is more than 5 crores of the net profit there. All right. So if we were to really look at the solution, of course, that is something which we talked about: net worth criteria, turnover criteria, and the profitability criteria, net profit criteria. That's where the need to form a CSR committee, which is comprising of at least 3 directors with 1 independent director. Okay. If a company is not required to appoint an independent director, then you would form a committee with at least 2 directors there. Okay. Likewise, as we said that, the board shall, the CSR committee shall formulate and recommend to the board about the CSR policies and the amount to be spent, plus monitoring thereof. Okay. From the board's perspective, you look at the composition of the CSR committee, recommended policies, where you want to spend the money, the content on that part, disclosures of the information on the website, and the activities that you want to kind of course do. Ensure that at least 2% of the average net profits of the last 3 years are being spent. And in case there's a failure, we talked about that as well, the reasons of those to be disclosed. In the given scenario, of course, we are provided with the information of the financial year. Of course, the financial year in the applicable scenario is year ended 31st of March 2017. And that's where we said, while your net worth or the sales criterion are not met, the profit criteria is met, because the last year's net profit was 8 crore rupees. Therefore, XYZ is required to form a CSR